I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Kentucky Republican Rand Paul is the reason why the Senate hasn't voted yet on the Senate spending package. Paul is reportedly holding out for a vote on an amendment to keep Congress under strict budget caps. Under Senate rules, all 100 senators must agree to hold a vote. Without Paul's consent, the vote would happen at 1 a.m. The government shuts down at midnight tonight. House Minority Leader Nancy Pelosi has sent a Dear Colleague letter saying she won't vote for the bipartisan deal because it doesn't include protections for dreamers. Pelosi did concede the bill contained investments that will create jobs and spur growth. She spoke for more than 8 hours yesterday in opposition. Today is White House Staff Secretary Rob Porter's last day on the job. Porter announced his resignation Wednesday after reports surfaced that he had emotionally and physically abused his ex-wives. People familiar with the matter say senior White House aides were aware about the domestic violation and the violence that was alleged. Eagles fans have waited almost 60 years for this. Today, Philadelphia honors its Super Bowl champions. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
I'm Emily Chang, and this is Bloomberg Technology. Coming up, Qualcomm rejects Broadcom's second bid for the chipmaker. Why Qualcomm says the offer undervalues the company. Plus, Twitter makes a profit for the first time ever, and revenue grows again after 4 quarters. Our deep dive on Twitter's blockbuster earnings report. And a gold medal for Pyeongchang. The city hosting the Winter Games will become the first to debut 5G. We will go live to South Korea. But first to our lead. Qualcomm has officially rejected Broadcom's raised bid of $82 a share. Qualcomm says the proposal materially undervalues the company and falls, quote, well short of firm regulatory commitments necessary given significant downside risk of a failed transaction. When Broadcom made this bid earlier this week, the company stated this would be its last and final offer. Joining us now with more detail, our Bloomberg editor-at-large, Corey Johnson. So, Corey, what does this mean for Qualcomm and for Broadcom?
Well, I think it means that this deal is looking increasingly unlikely. There were a lot of reasons. This faced a lot of headwinds, regulatory, chief among them. But what we also saw is that the market just didn't believe it was going to happen. It wasn't a pure offer. It was a pure cash offer. It was a cash and stock offer. So the new owners would have to agree that the shares of Broadcom, as priced as they are, had more upside than the shares of Qualcomm. And the market clearly didn't think that was the case. And the board clearly did not think that that was the case. So now Qualcomm's going to go their own way, and they're going to try to right their business. And I think you could also see the market didn't believe it as well. Qualcomm shares trading far below what the Broadcom offer was if you believed that it was a real offer. Typically, a company that's going to get acquired sees its share prices quickly rise to the price at which it was going to be acquired. This wasn't going to happen.
Look, I have sources at Broadcom who say the CEO, Hock Tan, gets what he wants. Does he have any other options here, and what are they?
I think in terms of Broadcom doing other acquisitions, there's no company quite like Qualcomm. I mean, the only other thing that might even be anywhere like it is Intel, and that'd be a guppy swallowing a whale. We can't imagine anything like that happening. It's a really unique intellectual property asset that Qualcomm has, and as I said, there's really no other company out there like it.
All right, Corey Johnson, our editor-at-large, you're sticking with me. We're going to talk about Twitter, a banner day for Twitter as the social media platform posts its first real profit. Shares soared the most since its 2013 IPO after it reported its first revenue growth in 4 quarters. This continues the recent turnaround trend for Twitter, which recently lost its COO and has been continuously fighting the scourge of fake news. Joining us now from San Francisco, Selena Wang, who covers Twitter for Bloomberg. Corey's still with us, of course. So, Selena, break it all down. What do you think the highlights are here?
That's correct. Twitter did finally post some really solid financial results, but investors really might be overreacting to what really truly are mild progress. Now, we did see revenue tick up for the first time in a long time, but it was really only 2% growth. We also saw them reach GAAP profitability for the first time, but it's unclear if that's sustainable since that was mostly due to severe cost cutting over the past few years. Now, most alarming is the fact that monthly active users failed to grow and actually declined in the United States. And even though daily active users show double-digit growth, the question is, how much more value can you continue to extract from the same daily active user base? And at a certain point, Twitter will hit a ceiling. So while this is strong results for this quarter, the long-term sustainability of the company is still up in the air.
So, Corey, if more users aren't going to come, can they squeeze more out of the existing users that they have?
Well, that's the question. And what we've seen actually is a decline. If you look at the change in the year-over-year change in revenue per subscriber, it actually declined over the fourth quarter in 2016. That's exactly the wrong direction. You want inclines, not declines, and they've got declines. They've got advertisers and marketers apparently paying worse. So now the $2.22, compare that on a year-over-year basis to 226. We might even have a graphic that shows that. But either way, the numbers go in the wrong direction there. It's only one, but and that's advertising revenue, that's sequential growth. But really, what we want to see is a year-over-year change, and the year-over-year change is worse for them. They've really got to convince advertisers to pay a lot more for those advertisements. And part of the problem is, as the mix goes more international, the revenue per subscriber goes down. So they might be able to raise rates in the U.S., but as the mix shifts to increasingly, and indeed they lost users in the U.S., as the mix shifts to more international, and over 79% of the users are international, you're going to see less revenue per user because the international ads just aren't worth as much.
We do have a chart here that shows the profit, and it is G#BTV5950. Selena, how are investors going to view this, given, the lack of progress around users, but the obvious progress when it comes to profit?
We're really seeing investors overreact to these numbers right now. They're very excited to see Twitter jump above and beyond that low bar, which really was to stop shrinking. But Corey brought up a great point, which was this growth in international users. I just spoke to an analyst that said something really interesting, which was, if you're betting on Twitter, you're actually betting on Asia, and most specifically Japanese growth. Japan saw some of the greatest growth, double-digit growth, while U.S. growth was actually declining. And that is alarming, given what Corey said earlier, which is that you get more value per user from the United States. That being said, investors are really excited about some of the incremental product changes that Twitter has been making over the past several quarters, which are really just now finally bearing fruit. And some of those changes include the timeline. They've adjusted the algorithm so that you see the most relevant tweets. They're trying to personalize the timeline as well, and we're starting to see them do a little bit more experimentation on the Explore tab. And Jack Dorsey also admitted on the earnings call today that Twitter historically has not done a great job of matching users on Twitter with the interests and topics that they want to follow. So that's going to be a big focus. So those factors are what investors are reacting to, but we'll probably see the share gains pare down over the next several quarters.
All right, Selena Wang, who covers Twitter for us, as well as Corey Johnson, our Bloomberg editor at large. Thank you both. I want to note Bloomberg LP operates a global breaking news network on Twitter called TikTok. Sticking with earnings, Activision beat Wall Street estimates for both profit and sales, driven by strong sales from the latest entry in its Call of Duty franchise that brought the game back from outer space to World War II. Meantime, chipmaker NVIDIA also coming in with earnings. NVIDIA seeing earnings per share and revenue beat analyst estimates for the fourth quarter. And finally, Expedia reported its fourth quarter as well. Adjusted earnings per share missing the lowest analyst estimate, while revenue came in at $2.3 billion, with analysts expecting $2.36 billion. Coming up, Amazon taking a huge step, integrating its Whole Food purchase for Prime customers. We'll explain next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, in the U.S. on Sirius XM. This is Bloomberg. In the latest revolving door, Lyft has hired Tesla's John McNeil as COO to help the U.S. ride-hailing startup gain more ground on Uber. McNeil was president of global sales and service at Tesla. His old department will now report directly to CEO Elon Musk, who said there are no plans to search for a replacement. Remember, Tesla has pledged to eventually create its own ride-hailing service using self-driving cars, though there have been little signs of progress on that initiative. Amazon is taking a big step to integrate Whole Foods in its operations after purchasing the grocer for more than $13 billion last year. The company is introducing free 2-hour deliveries from its Whole Foods stores for Prime customers. Deliveries will be available in 4 U.S. cities so far, but Amazon plans to expand the service across the U.S. this year. For more, I want to bring in Bloomberg Tech's Olivia Zaleski in San Francisco, who has reported extensively on the Amazon Whole Foods deal. And with me in New York, David Kirkpatrick, CEO of Techonomy and guest host for the Hour. Always great to be in the same place as you, David. Thank you. Olivia, though, I want to start with you. Walk us through the nuts and bolts of this and how it's going to work.
Well, let's start with the numbers here. About 90% of Amazon Prime's 90 million users, it's a huge amount of people, live within 10 miles of a Whole Foods. So it's really a no-brainer that Amazon's going to come in and they're going to offer this great option where you can get your groceries delivered for free within 2 hours from those hubs. So, I mean, if you think about it, it's much smarter to have the delivery coming from these individual stores. Amazon Whole Foods has about 400 plus stores at the moment, and they are in some of the wealthiest neighborhoods on the planet. So you can go in, you can have the delivery come right from those stores rather than some distant warehouse where it's a lot more expensive.
So, David, we've been talking about this now for months, the power of Amazon, just not to underestimate them. How big a deal do you think this is?
This particular thing is just one more incremental piece of progress towards global domination. I mean, these people are the scariest and at the same time the most impressive company most of us have ever seen. I mean, it is not hyperbole to sort of ask the question, what industry will Amazon not take on and possibly take over? But they execute better than anybody. I also think they're amazingly good at incrementalism, sort of seeing what they have and making the next right move on top of it. So I'm very impressed with this.
Olivia, what does this mean for the competition? Obviously, companies like Instacart, which, had a very close relationship with Whole Foods until Amazon moved in there.
Well, Instacart has been very smart about this. They knew this was coming and they've been planning around it, and they've really quietly been building up their customer base. Instead of focusing on Whole Foods, they've now gone to every other grocer that would compete essentially with Amazon Whole Foods, and they now have 6 of the 7 largest grocers in the country. The only one that's holding out at the moment is Walmart, so we'll see what happens there. But they've been very strategic and they've built these really solid relationships with them. So I think what we're going to see play out here is this Whole Foods versus everybody else drama that we're going to see.
So what else do you think we will see over the course of the next year? Plans to expand this across the U.S. in 2018?
Well, I think we'll definitely see it expand to almost all of Whole Foods stores. I think we're also going to see a lot of pressure get put on the suppliers to Whole Foods. Right now it costs about $25,000 to have premium shelf space in a Whole Foods. I think we're going to see that number go way up. This is according to some reporting from the Wall Street Journal. There have been some reports that said it would be up to $300,000 for just a couple weeks in a prime eye-level spot in a Whole Foods. And that's really going to put pressure on the suppliers. Either they're going to defect or they're going to have to hang on for dear life.
David, where do you see chinks in the Amazon armor?
Oh, interesting question. I mean, I think you can always risk doing too much, and they seem to have no bounds on their ambition. That would be the part that I would maybe worry about, except like I said before, their execution capabilities are so extraordinary that if there's any company that could do this wide range of things that they're doing, it would be them. And it's hard to really fault these people, except for profit. They don't make much profit. So you can worry about that, but they're great operators.
Investors don't seem to care. All right, David Kirkpatrick sticking with me throughout the show. Olivia Zaleski in San Francisco, who covers food tech for us. Olivia, as always, thanks. Coming up, the industry average for women-founded companies receiving VC funding is 2%. We're going to talk to the female partners of Canaan Partners, whose portfolio is 25% full of women-led companies. That is next. This is Bloomberg. Facebook is expanding its operations in Dublin. People with knowledge of the matter say the social media company plans to lease an office campus in the Irish capital about the size of 8 football fields. Space is currently occupied by allied Irish banks, and other locations are said to be under consideration. A record amount of office space was rented in the city last year by big tech companies, including Alphabet, Microsoft, and Facebook. Well, Canaan Partners was founded in 1987 as a spin-out from GE Ventures and remains one of the most diversified funds that invests in tech. The venture firm is the first and one of the only firms with 3 female general partners. 40% of the investment team overall is female. 47% of the investment team is immigrant or first-generation American. All impressive. But what stands out the most is that 25% of Canaan's portfolio is founded or led by a woman. That's compared to the industry average. Women-led companies get just 2% of venture capital funding. I sat down with Maha Ibrahim and Nina Shelson of Canaan Partners and asked how they might describe the issues regarding gender in venture capital. Take a listen.
So in the last few years, there has been a race for people to hire women, for firms to hire women. And they've done that at senior roles, they've done that at junior roles, largely in response to public outcries and pressure. Over the next couple of years, what really is going to be the true test is how many of those women stay. How our industry retains those women, helps them be successful, really integrates them into the fabric of venture capital and entrepreneurship. So I think we're at a good time right now. I'm optimistic for the future, but it just means that we're going. I take responsibility, and I know that many other female GPs take responsibility in making sure that those women are given every opportunity to succeed.
Canaan is unique in that there are not 1, not 2, but 3 women investing partners, and 40% of the investing team is women. Mm-hmm. How do other firms get there?
Well, I don't think Canaan is diverse by design. I got to think a lot about this as I decided to join the firm 2 years ago and do a lot of homework about what is Canaan really doing right and what is the recipe. I think there are a lot of underpinnings to the culture and the governance and how the firm is run that invite diversity as opposed to necessarily a deliberate quota or setting out to add women. And as I said many times in different contexts, I think diversity begets diversity. So the fact that from fairly early on there was a woman at the head of the table, or at least at the table and then increasingly at the head of the table, which is Maha's seat, it became so much more inviting for the next woman to join and the next woman after that. It's a very virtuous, positive cycle. All without a fixation on this, because the fixation is about excellence and performance and being the absolute best that we can be at venture capital. And we just feel that it takes a diverse group to achieve that.
Maha, you were the first woman investing partner at Canaan, and you now have, as Nina said, a seat at the head of the table.
Thankfully.
Literally the head of the table.
Not that. I'm not thankful for that, but yes, yes.
What was it like being the first woman to join an all-male firm?
I was probably too young to realize the impacts of it. I was there for myself, and I was there to prove myself and really understand the industry. To Nina's point, diversity does beget diversity. It just so happened that I was very fortunate to be in a firm that highlighted it and was okay with it and made it a non-issue. And from there, I hired people, and I wanted to hire people who had diverse backgrounds, because I'm a first-generation immigrant, I'm a female, and it just so happens that I've hired a lot of people who are first-generation immigrants or female.
Talk to me about how, the portfolio at Canaan simply looks different than other portfolios.
Well, strictly speaking, in terms of numbers, I mean, we're not there yet. 25% of our companies are female-founded or female-run, which isn't parity, but it's a lot better than the 7 or 8% statistic for the industry as a whole. But I think one of the things that happens inside Canaan in the investing partnership, as well as entrepreneurs when they approach us, is the pattern matching of a female entrepreneur or a female executive is no longer sizing her up. Is she like my sister, like my mother, like my wife, like my daughter? But is she like the other entrepreneurs in our portfolio? We feel that internally around the table as investors, that it's so normative that there's a diverse group around the table, as opposed to trying to find that token example or reference point.
Are you seeing change?
The good news is that now we've never had more pressure to have those activities take hold. So there are venture firms and the NVCA, of which I'm on the board, that are trying to establish norms, that are trying to establish public behavioral settings, to which the conversation with the entrepreneur doesn't have to veer into the sexual realm or the ultra-personal realm. They're doing it via pledges, they're doing it via diversity training, a lot of means. We're still not there. We need to be there. In addition to that, there are some firms that are locking into term sheets the requirement that companies, their portfolio companies, have training and have harassment policies internally so that it's not happening, or it's minimizing the chance that it happens in the portfolio companies.
While you're here, I want to talk about your exciting portfolios. And Nina, you are focused on the biotech space, and there's a lot of exciting stuff happening there. You know, what are the trends that you're most excited about going forward this year?
There's a lot it's been an incredible, sustained sort of bull market for biotech. It's been an unprecedented period of great science. I think one of the things that we are really excited about at Canaan is we're company founders, company starters, early builders, and there's been so much translational science coming from the laboratory and academia into small companies, and the funding and the risk appetite among all the constituents, whether it's pharma as acquirers or partners, the capital markets, public investors, and venture to support that.
And Maha, your portfolio is unique in that you focus on consumer and enterprise throughout your career, which is very broad. So, you know, where are you focused right now?
So right now I'm focused more on the consumer side, but let me explain why. So on the consumer side and on the enterprise, for the last several years, we haven't seen that tsunami foundational change that we did, say, 10 years ago with the consumer, with mobile, that obviously brought in companies like Uber and Airbnb, et cetera. And then on the same side, on enterprise, we've seen really the infiltration of open source depress price points considerably. And you haven't seen the foundational change like you saw with virtualization. So I'd say that both sides of the house are experiencing headwinds right now. So where we're looking, where I'm focusing, are certain pockets within consumer and within enterprise. So for instance, I just invested in a yet-to-be-announced esports company. Esports is incredibly large and fast-growing, both in the United States and overseas, that I'm excited about. At Canaan, though, we're also looking at these two areas and looking beyond them because, again, we're looking for tsunamis of transitional change. So you're seeing us invest in areas like space, like robotics, like quantum computing, ones that we've historically had actually a really deep background in, but are coming back now with the advent of artificial intelligence.
That was Maha Ibrahim and Nina Shelson of the venture capital firm Canaan Partners. I interviewed both of them for my new book, Brotopia, Breaking Up the Boys Club of Silicon Valley, out this week. Coming up, Twitter CEO Jack Dorsey saw his social media platform posting strong results, but will it stave off the suitors? We'll find out next. This is Bloomberg Technology. I'm Emily Chang. As we told you earlier, Twitter is hot off its steam of legitimately good financial news for the first time in a year. But a question remains, does this mean the social media giant is still ripe for a takeover? Rumors have been aplenty in the past, from talk of Google or Salesforce buying it to Lloyd Blankfein's infamous tweet late last year that got people talking that a Twitter takeover was imminent. But hasn't happened yet, so what happens now? We'd like to answer that question. Our Bloomberg Deals reporter Alex Barinka is with us, and still with us, David Kirkpatrick, CEO of Techonomy, with me here in New York. So Alex, where do we stand? Who are the suitors, and what is the likelihood of something happening here?
Well, you're exactly right. Twitter is the perennial name brought up in terms of potential targets out here on the West Coast. And, you know, this earnings report today potentially increases that probability for a few reasons. If you ask our folks over on Bloomberg Intelligence, the analysts over there say, look, the departure of Anthony Noto as COO, the fact that Jack Dorsey is still managing two companies as CEO potentially boosts the potential of them becoming a target. And frankly, talking to other sources on the street, they've said things along the lines of, look, you might want to buy a ship that's going down, but you don't want to buy a ship that's going down and on fire. That last bit, that on fire bit, is something that might have eased some of the concerns with the results today. If you do look at Twitter's results today, they did turn a profit for the first time. And it's not necessarily because the top line looked pretty. It was because they've been very deliberately cutting expenses. And if you look at their expense base, it's gone down for the past handful of quarters by a significant amount. If you're a potential acquirer and you're coming in and saying, what could this asset do for me? You don't want to take on something that's just burning cash hand over fist. So if they're getting that bottom line kind of in order, cutting the expenses they don't need to be spending, simplifying and improving that margin, then that could potentially bring them up into the consciousness of some of these names that you mentioned.
David, what's your take on all this in the context of the latest results?
Well, I do think Alex is very intelligent in her analysis. And at this time when all these big companies with gigantic cash hoards overseas are bringing them home, $22 billion market cap company is not so much to swallow. And I think it does make sense that Twitter seems to be making a lot of smart moves. It's still a really tough business. It's not really a big, high profit growth business, but it is central to the dialogue and central in being. I mean, I think this thing that Dorsey expanded the length of the tweet, which everybody criticized him for, and it seems to have gone well.
I've been enjoying it myself.
I have enjoyed it, and it was a nervy move to do that. So I think it makes sense. I can see a number of companies that could potentially want to do it.
So, Alex, there has been, product evolution, as David was mentioning here. When you look at these potential suitors and you listen to the chatter, does anything seem more or less likely?
So I will point out to one change, not necessarily from Twitter, but from Facebook. The fact that Facebook is pushing more friends and family content into the news feed has, according to some analysts, upped the value of Twitter for advertisers. If they are focusing, if advertisers want a platform where their content's going to be seen, if they're going to get that more out of Twitter, Twitter could gain more share. So the product changes that y'all are talking about has definitely increased the value of Twitter in the eyes of holders. In terms of the eyes of an acquirer, they have to square whether or not, if you're an enterprise company, say, like some of the names that have been floated in the past, is this consumer data or this advertising data relevant for you? The one big hiccup that I will point out is the fact that Twitter shares are up more than 60% in the past 6 months. And on today's results, you're looking at an enterprise value of upwards of 7 times the estimate for revenue for this next year. So that is, yes, there are a lot of very rich companies out there. Whether or not they think Twitter at this valuation is swallowable, is a question. There has been a lot of exuberance today from the street in terms of this surprise profit that they posted. Whether or not that comes down a little bit will be something that anybody who might consider taking over this company will most certainly be watching.
That's an interesting point, that if Facebook is focusing more on friends and family, Twitter, which really does have such an important niche in real-time news, has an advantage there.
Twitter's where you go for news. Therefore, maybe Twitter's where you get mass market advertising like you used to get on TV, or you still do. I think also, if I were thinking about what might happen with Twitter, the idea that an acquirer is going to do deep financial analysis and buy it based on that, to me, is unlikely. It's more like a trophy asset that some companies, at a time when so many are so wealthy, might really want to own for some subtler, less financial reasons, just as a portfolio element. I mean, it is an extremely prestigious platform in a lot of weird ways. After all, the president loves it. There's reasons people might want to own it just for that reason alone.
And there's reason the president loves it. Alex, Twitter is still fighting an online harassment problem and constantly changing its rules around abuse. Some of my sources have told me that's actually prevented potential acquirers from moving forward because they are concerned about the online harassment and the trolling problem. Are you hearing that is a concern from some of these potential acquirers?
It's definitely a quagmire, let's say, that some potential acquirers would not want to stride into. The one thing I can say in the M&A world, uncertainty is the one big wrench that can get thrown into any M&A process. And if there is so much uncertainty around the political blowback, as we've continued to see DC get louder in the chorus kind of against some of these tech companies and how they've been playing in consumers' day-to-day lives and the political process, then if you are some of the names that Bloomberg Intelligence has thrown out Comcast or Microsoft or Google. That has to be something that you're considering, especially as you're working, as you might be working through getting a deal through Trump's DOJ. So it's definitely something that they're going to want to see how it plays out if somebody's going to throw their name out there as a potential acquirer. And it seems like what some of your sources saying, or Emily, would be pretty spot on if my gut is right.
All right, Alex Barinkar, Bloomberg Deals reporter, keeping her ear to the ground for us, and David Kirkpatrick, CEO of Techonomy, my guest host for the hour. You're sticking with me. I should note Bloomberg LP operates a global breaking news network on Twitter called TikTok. WhatsApp has started testing a new payments feature in India. This new feature will allow people to send money to other WhatsApp users. However, this will not let them send payments to merchants. That's according to TechCrunch. The test hasn't been publicly announced because it's not widely available at this time. Coming up, from harassment, sexual harassment to discrimination, the tech industry has been, let's face it, a boys' club for decades. What are the real problems and how do we change them? We'll talk about that next. This is Bloomberg. A story we have been following, the Uber versus Waymo trial. A computer forensics expert delivered some of the most troublesome evidence yet. In the trial, the expert's firm was hired by Uber to vet Anthony Lewandowski, and their findings revealed that Lewandowski had Google source code, engineering documents, and self-driving software. As the trial continues, it will be up to the jury to decide if those trade secrets made their way into Uber after Lewandowski was hired. Well, all this week we've been talking to guests and sharing stories and themes that I cover in my new book, Brotopia, Breaking Up the Boys Club of Silicon Valley, now in stores. We've been talking about everything from hiring practices to workplace culture that is shaped by the leaders at the top of the companies in technology and how to bring about real change in the workplace for women. Techonomy CEO David Kirkpatrick is here. He has read the book, and I am so excited to talk to you about it and hear what you think, because you've been covering Silicon Valley for decades.
It's super good. I mean, I just reading, asking myself, did she see all this? I mean, your timing could not be better. You kind of must have just intuited that this stuff was coming, because I know when you started writing it, because we were talking about it, and it was a while ago, but you are releasing it into the thick of a social obsession.
Honestly, I realize the timing is good now, but I had no idea that, you know, women in tech and women in business would become like a breaking news story. I started writing this 2 years ago, before Trump, before Susan Fowler, before the Me Too movement, but I certainly benefited from that momentum. And I, obviously I've been covering Silicon Valley for a long time, and people would always talk about sexism, but no one would ever want to talk about it on camera, and that was the problem. It was trying to get people to tell their stories, and I realized nobody really understands sort of how and why we got here. And the more I started digging, the more I realized, wow, there's a lot people don't know. I mean, and just as a reader, a man, an older white man, to summarize, it's shocking the number of stories you're telling and the number of statistics you reveal about really how bad it is. I mean, the statistic, what was it, 807% more women drop out of tech jobs than other kinds of engineering jobs than other kinds of jobs. I mean, that's almost a ludicrous percentage. Right, and those women are not leaving work. They're going to work in other fields. Yeah, they're leaving tech. They love their jobs. In fact, they actually say they love their work, but they also say that the environment is hostile. I think a lot of people blame some of the attrition that you see in technology on women leaving to have kids, but it's actually not the case. They want it. They want to keep working. What about this amazing thing that I confess I didn't realize in all the many years I've spent in tech, that none of these companies have childcare on site. I mean, that Apple just opened a brand new $5 billion campus with all of these amenities and gyms and yoga hall, as you pointed, a 2-story high yoga ceiling, and they don't have childcare? I mean, in New York,
that kind of thing became pretty common a long time ago in other industries.
No, it is fascinating. I realize childcare can be complicated, but these are also companies that have, created these tricked out buses that are shuttling, hundreds and thousands of employees to work every single day. They have these amazing perks, from the free food to these incredible, health benefits, gym clothes that you can wash at the office. And, so I just thought, why not? Childcare, other companies offer it, and certain Silicon Valley hasn't shied away from hard problems, but that was sort of more of a thought-provoking thing, just to sort of put it out there. What is possible?
But it's obviously an issue. If tech has a woman problem, they don't have enough women, and they don't have childcare on site. I mean, no wonder. I mean, these things are directly connected, and you connect those dots. But do you think? I mean, I don't know. Even based on the early reaction to your book, that things like that will be remedied in coming months and years?
I really just want this to start a meaningful conversation and to make people think. And it's interesting, I was talking to Patty McCord, who ran HR at Netflix for a really long time and has thought about these issues so much. And at first she was like, well, childcare, it's expensive, it's hard. And then she read the book and she said, you know what? We should do that.
Great.
We should do that. So, of course, I'm hoping for that reaction from more people. Sheryl Sandberg was also on the show earlier this week and talking about this new mentorship initiative that she's launching in response to the Me Too movement. And one of the things, I write about her in the book is that when she got to Facebook, she started asking questions about content that was getting left up on the site, violence towards women. And these were questions that nobody was asking. And I do think that's why, Facebook has a better handle on the online harassment and trolling problem than Twitter. And at the same time, Ev Williams, the co-founder of Twitter, told me that he thinks if more women were on the team early on, that online harassment and trolling maybe wouldn't be such a problem. Women are the victims of the more extreme forms of harassment. And, Ev told me they weren't thinking about this when they were building the product.
Well, one of the great narratives right now about tech is that somehow it's gone off the rails and didn't anticipate some of its own implications for society, whether it's an addiction or political manipulation. Do you think that if there had been more diversity there, a variety of sorts, and especially women, that might have made it a little easier for those companies to anticipate some of these very toxic effects that we're now criticizing them for?
Absolutely. I mean, I think people from, a wide variety of backgrounds, you need all kinds of people making these products that billions and billions of people use. I actually asked Sheryl Sandberg this question. I want you to take a listen to what she had to say.
Do I think Silicon Valley would be a better place if there were more women running more companies? Absolutely. I think every industry would be a better place if there were more women running more companies and more women in government.
And I agree.
Yeah, and quite impressive you got her to talk to you about that. I mean, she is an exemplary, rarity, really, to have that level of power. And having had a lot of influence. But I just have to say, what an amazing job. And it is, for me, a little horrifying that I didn't realize how bad it was. And, all my women friends would say, well, you're just a typical idiot guy. But
you're not alone. You're not alone. Thank you, David.
But thank you for writing it.
Thank you.
I think it's a major piece of journalism that is beautifully written. So I'm sure it's going to do great.
Thank you, and thanks for reading it. And you were a huge support to me throughout the process as an author yourself. It is a long process, so you need as many people cheering for you.
You did a great job.
As possible. David Kirkpatrick, CEO of Techonomy. As always, great to have you here on the show. Coming up, multiple networks are beginning trials of 5th generation or 5G service this year. How this wireless high-speed internet service will be trailed at the Winter Olympics next. This is Bloomberg. Trialed, I should say. Qualcomm says a new generation of wireless high-speed internet service is coming quicker than most expect. A group of mobile phone network providers, including China Mobile, are beginning trials of the 5th generation or 5G service this year, and many will start it commercially in 2019. In a statement made on Thursday, Qualcomm said the providers will use its new X50 modem, a chip capable of accessing data at more than 4 gigabits per second, multiple times the best speed available currently. And sticking with 5G, KT Network is leading the race. The Korean telecom company launching the world's first 5G service at the Pyeongchang Olympics. Bloomberg Television's Stephen Engel sat down with the company's division president to talk about their bet on 5G. Take a listen.
We have rolled out 5G this time by combining KT's technical skills and services. We have successfully completed everything, and it's a huge achievement to showcase 5G at Pyeongchang.
Joining us now, Bloomberg's Stephen Engel, who is in Pyeongchang, South Korea. So, Stephen, talk to us about the importance of 5G here.
Well, it's pretty important, especially for South Korea, where the incumbent telecom operators, they are suffering some revenue problems in the latest quarter. Actually, KT had a pretty disappointing fourth quarter because the government also has mandated that they lower some of the rates to the poorer people in South Korea. So their revenue really took a hit. So they're looking at 5G, rolling it out to get these higher spending customers into, higher paying or higher ARPU services, like, of course, down the road, AI and also augmented reality and virtual reality. So that's it's pretty important to get this rolled out as quickly as possible, as they've been under pressure on the top line.
When is the plan to launch 5G commercially?
Well, like in that last story that you just had in the United States, South Korea is planning both, KT and also SK, which is the largest telecom operator here, the big rival. They plan to roll it out next year. But here at the Pyeongchang Olympics, KT, which is a telecommunications partner with the Olympics, they're going to have a trial of their very fast 5G services. It's not going to be throughout the Olympic Village. It's going to be in a specific area where people can come in and try their various AI and augmented reality displays and interactive participation zones. So they'll still, though, have the rollout coming in 2019, as well as SK.
How is the majority of the audience going to watch this game? Are they going to be live? Are they going to stream it? TV?
Yeah, so it's going to, of course, the IOC doles out those contracts for the broadcasters in various countries. So they all have the exclusive rights, like in the United States, I believe it's NBC, not necessarily Bloomberg Television. So they'll be watching it that way. Going down the road, though, for 5G, a key issue is going to be, as you know very well, whether we can watch all these games in virtual reality on 5G will be this latency issue. And that is something that KT talked exclusively or extensively about. Right now it's down to 10 milliseconds. Eventually it's going to get down to 1 millisecond, so we can perhaps down the road watch the games in full augmented reality and also virtual reality.
All right, Bloomberg's Stephen Engel. Stay warm from Pyeongchang, South Korea. Thank you so much for joining us. That does it for this edition of Bloomberg Technology. Reminder, we're live streaming on Twitter. Check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.
One more read. Stand by for 10 seconds.
I'm Emily Chang in New York with a look at the top tech headlines. It was a banner day for Twitter as the social media platform posted its first real profit. Shares soared the most since its 2013 IPO after it reported its first revenue growth in 4 quarters. However, monthly active users were little changed from the prior quarter at 330 million. Overall, this continues the recent turnaround trend for Twitter, which recently lost its COO and has been continuously fighting the scourge of fake news. Qualcomm has officially rejected Broadcom's raised bid of $82 a share. Qualcomm says the proposal materially undervalues the company and falls well short of firm regulatory commitments necessary given significant downside risk of a failed transaction. When Broadcom made this bid earlier this week, the company stated this would be its last and final offer. And Facebook is expanding its operations in Dublin. People with knowledge of the matter say the social media company plans to lease an office campus in the Irish capital about the size of 8 football fields. The space is currently occupied by Allied Irish banks, and other locations are said to be under consideration. A record amount of office space was rented in the city last year by big tech companies including Alphabet, Microsoft, and Facebook. Those are the top tech headlines. I'm Emily Chang in New York. This is Bloomberg.